Good morning, everyone. This is Darius Dale here presenting our macro minute for Wednesday, November 3rd, 2021. Starting with markets, we got stocks flat this morning, commodities mixed, the dollar down, crypto flat to up, global bond yields down. In terms of big movers, we got copper bouncing off the lower boundary of its probable range up 1.2%. WTI still correcting from the upper boundary of its probable range down 2.2% this morning. On the economic front, we got the first batch of October services PMI data. The countries that improved sequentially are Australia, China's Caixin Index improved, India, and the UK. These are all countries that are coming out of the peak impact of Delta. Declining sequentially, you had Ireland and Russia. On the auto sales front here in the U.S., obviously, auto sales and production have been hampered all year by global supply chain disruptions. We finally got some uptick in the auto sales, taking it to the chart here. So, this is global supply chain disruptions. And as we said, hey, as we move past the peak impact of Delta, we're likely to see that ameliorate the margins that we finally did. Ticked up 800K to 13 million SAR on an annualized percent change basis. That went from down 57% annualized to up 117%. So that's positive at the margins. Maybe we'll see a little bit more of that. It's our expectation that we see a little bit more of this throughout the next couple of months. Also moving abroad, we have Chinese Premier Li Keqiang as said, warned investors that the Chinese economy faced new downward pressure, but he did little to offer anything in the way of immediate relief. So expect more downside with respect to the Chinese economy there. That's in line with our forecast. With respect to the FOMC catalyst today, obviously it's been extremely well telegraphed that they're likely to taper. We don't expect any changes on that. I think what Powell's going to do is try to do his best job of ignoring the recent market signals on the front end of the curve in terms of pulling in policy rate tightening expectations of 22. I think you have the Bullards and the Bostics of the world who are actually quite pleased with the market doing the Fed's job for them. So this will allow Powell to just sort of maintain his guidance with respect to the balance sheet and not really have to get into the mess that is eventual policy tightening on the front end of the curve. So that's our expectation. We'll see if markets behave that way. In terms of what's overbought and oversold in our global macro risk matrix, nothing's overbought. Shanghai Composites oversold. Same with the 10-year Boon yield, 30-year Treasury yield, as well as the 10-year TIPS break even. And then lastly, looking at the risk reward setup for today, 2.5% downside in the S&P 500 versus 0.9% upside. Bloomberg Dollar Index, a fair fight, 70 basis points of downside versus 90 basis points of upside. And then 10-year Treasury yield, which is right at the lower boundary of its probable range versus 25 basis points of upside. I highly doubt we're going to get there anytime soon to the upside, but certainly could bounce here because bond yields have obviously traded down into this event. So with that, Darius Dale presenting our macro minute for Wednesday, November 3rd, 2021. If you like what you see, come check us out at 42 Macro. We appreciate you. Cheers.